I'll pull up our presentation here too.
Okay, okay. And you can go ahead and start whenever you get ready.
Perfect.
Go ahead and introduce yourself. I didn't get an intro of you, so I don't know anything about you, but I'll just say I'm Vanda Crossley. I'm with eXp Realty, and I'm also a lender with Loan Factory, and MLB is one of our lenders. And I had the privilege of meeting Maria. She came out to that was the AHA Club meeting that you came to. She came out there and talked about your company and talked about how you have these great products. So I thought I would highlight you guys today and put it on my YouTube channel. So I appreciate you guys for being here and thank you.
Awesome. I'll jump into there. My name is Jonathan Brandeo, and I'm the Director of Learning and Development here at MLB. And I'm super excited for us to jump into today. We're going to be talking about Green Advantage, which then I'll transition it over to Mark. Mark's gonna is our expert on our that side of things, but we work hand in hand together on this program, and of course we have a wide variety of other things as well. But I'll hand it over to Mark Anderson.
Yeah, my name is Mark. I work over at Hoper, his organization. And so MLB is probably the best partner that we have with it. And they do a super good job at helping home buyers get into houses and just make sure they can be happy and continue to afford those properties. And so, kind of one of the best parts about MLB is the whole goal is to help everyone's lives in the transaction to be a little bit better. And so that's where Green Advantage helps out is we want to make sure that the realtor, the home buyer, title, loan officer, that all of them have a better experience than they've had in the past. Because this is not a traditional DPA type of program. So we're able to elevate the amount of value that we're able to get to these home buyers. And so it helped them get into a better position. So do next slide. And so, kind of the goal of it that we'll start. And so, what gets us excited is talking about how to market the program and how to help realtors be able to get more listings or to qualify more buyers. Or if they're buying online leads, how do they convert those better to stand out? And then, how do they also go back to their current businesses and remarket to those and say, hey, pick me as your realtor because I can get you more value through buying a house with EXP or through Loan Factory instead of go to XYZ. And so we'll do the next slide's cool. And so kind of who it works best for. So it's an FHA program only, but it's typically designed for borrowers who are stuck on cash or if their DTI is a little bit high. So if they have like a truck loan that's waiting to be paid off, or also if the structure is just kind of wonky on it. And so home buyers are typically with this program are seeing around 30 to 35,000 in value during the first year in the home. And so there's a big differentiator when a realtor can say, hey, buy your house with me, or hey, sell your house through me, and I can get whoever buys this more value and help us maintain that price point and help us not play so much on price so we can sell more on value. So typically the borrowers that we're seeing having most success is those that are short on cash to close, who don't have a ton of access to gift funds or outside assistance. The auto loans are super popular, auto loans and credit card loans, getting those paid off with these funds. And then also, and I don't know if you guys do a ton of these in your area, but a lot of those that are switching from a USDA and then still wanting some of those benefits and going over to FHA. But primarily, it's a home buyer who's saying, hey, I want more out of getting into the home. I want to make sure that I can afford this on the long term. And so this helps them build that back up and kind of get into a better position. And so the number one thing that we're trying to solve is our goal is to help a home buyer build back their savings account sooner in the closing. And so the sooner that we can get a home buyer to having that 3 to 6 months in reserves, the happier we see home buyers becoming, the lower default rates we're seeing, and the better referrals we're seeing. Because a home buyer saying, "Hey, I just saved up a bunch of money. I don't typically save my money, but I saved up enough to get into the home. I qualified. Now I moved in." And if they don't have a substantial savings account, then they typically spend as much money as they make. And so their higher default rate, a little bit riskier of a borrower. But then also they're like, dang, like, should I have bought a house or should I have just waited? Like, I'm a little bit more stressed than I was expecting. Like, kind of the new home feeling wears off, and they're like, dang, like, I'm stressed. And so the goal with this is when we see a home buyer who builds up a sizable savings account. So when they have a 3 to 6 month in reserves, they're typically leaving that money alone and they're holding that aside. And so it's not used for more Amazon or furniture or whatever. They're saying, hey, this is my safety net. This is money that's here in case I have my car break down, in case I lose my job, in case whatever happens. And so it relieves a lot of pressure off these home buyers when they've got assistance to do that. And so Green Advantage is going to help them preserve that post-closing liquidity and then help educate and create a financial buffer while just supporting long-term stability through both education and then some income pieces as well. And so, kind of like we said from the beginning, the goal with MLB is to make their life better, is to put them in a much better position. And so it's not just, hey, close the deal, get them in a house, but it's how do we help them stay there and be happy that they made this decision.
I like
So
that.
yeah, I know, but that's the truth, right? And so the best part about it is if MLB said, "Hey, here's all these extra requirements to qualify for a home," realtors or loan officers would be like, "Ah, I don't want to go into that." Like they require more reserves or they require like so you can't do something like that. But this way is a way of getting the same outcome of where, hey, we can get borrowers more cash, more reserves, and have that added protection. And so I don't think this applies a ton to you guys, but just a heads up. And so don't sell this in Alaska or Hawaii. Dakotas are almost online. And then I think Massachusetts is as well. But then avoid Vermont too. But that shouldn't be a problem for you guys. And so how the program works, so home buyers, they've got to have a 620 credit. They can go up to 120% LTV with the part of the solar, and we'll get to that here in a second. And then also, if your realtors, and so especially this one's a big one we've been seeing recently. And so when your realtors are reaching back out to home buyers on their every 6 months or year or kind of however they do it on their birthdays and stuff, they're just saying, hey, checking in, whatnot. And if they used a DPA in the past, then we're seeing a lot of those being able to rate and term refinance those deals. And so the realtor can even just on their birthdays, whenever they're reaching out, if a home buyer's like, yeah, I love it, I'm happy, but I still have that second payment that's costing me 200 bucks a month or 250 or whatever it is, they're saying, hey, actually, let's reconnect with Vanda on here and let's see if she can't get rid of that second lien. Let's see if we can't refinance and remove that second payment and just kind of bring your monthly spending down on what you're having to pay between your electricity, your mortgage, interest, and all that kind of stuff. And so, but sorry, I digress. I sidetracked a bit. But on the borrower side, so pre-closing, what we've noticed is if you give a buyer too much to do, they kind of have this analysis by paralysis. And so they don't learn as much, they can't get as much done. And so most of our stuff is done post closing. That's where we've noticed that a home buyer has time to sit down once they're moved into the house, once they can think. And so that's when they'll build a budget and actually sit and look through their finances and look at savings opportunities with one of our professionals. But on the front end, so to qualify to use the program, you're just doing standard 20 to 30 day closes. A home buyer's going to spend 4 to 6 hours and they're going to pay 150 bucks. Once that course is completed, They're going to earn 3.5% of the home purchase price, and the funds are going to be deposited into a savings club account. And then we'll have earnings statements, certificate account statements, or savings account statements and certificate of completion.
Wait a minute. You're saying they have to take a course that they pay 149 for, and then after that they get up to
3.5%.
13,000?
Yeah, up to 13,000. And so
Never
those
heard
funds are going to be
anything like that before.
the DTI sucks, and I'll explain why here in a sec. But yeah, the programs, it's interesting. It's super fun. And so they'll take a course, they'll earn up to 13,000, and then they'll get these documents right here, which you'll provide to underwriting to show that the funds are sourced. They're not seasoned because they're going to earn these in within a couple weeks. But on the left-hand side, that kind of bluish teal document is basically a pre-eligibility letter. And so when you have a buyer and you're saying, hey, I might use this program on that, then you'll shoot a message over to Maria, or I guess the realtor will send a message over to you. You'll fill out a form from MLB, and then we'll have this created for you so you can show, hey, this property qualifies, the home buyer qualifies. Here's the estimated benefits, and here's kind of the number side of it. And then the middle documents, you'll get earning statements. So the home buyer's earning the up to 13,000 via 1099. So they will be taxed on it come the end of the year, but we have them meet with a tax professional to go through some tax advantage opportunities as well. And then the funds are going to sit in a savings club account. And so the borrower has the documentation, the money is there, but then they'll authorize the transfer of those funds to title at closing. So we don't run the risk of them spending the money or doing anything like that. And then far right has that certificate of completion showing, hey, they've agreed to the terms, they've taken that course, here's the certificate. And so post closing, and kind of like I was saying, the DTI is the biggest hurdle to overcome. And the reason why is because how the program works is if a home buyer just took education and got cash at closing, then this is just a DPA. There's no post-closing benefit. There's no way to really wrap it together to help a borrower succeed on the back end once they're in the home. And so how we do that is through a policy from the FHA called the solar wind technology. And when I say solar, I mean it's not the best word in real estate. We all hate it. And so if you ever tried to buy a house, sell a house, refinance a house, do anything that had those things on the roof, it's a cluster every time. What's great about the FHA is they remove all of those stressors. So there's no liens put on the property. There's no UCC filings. There's no third-party contracts that you're having to reach out to when they want to sell or refinance or do whatever with the property. And so what the solar is going to do is it's going to be added directly to the base loan. So they're not paying a separate monthly payment. They're paying the one mortgage payment. It's slightly higher because they're taking out a slightly higher loan amount. And that's where the DTI is hard. But on the back end, once they move into the house, they'll see a similar decrease in their electric bill. And so where they have an increased mortgage payment, they'll see a decrease in their electric payments to where they're offset and they're paying a similar amount on a monthly basis. And then for doing that, the borrower is going to get additional tax benefits as well. And then when they go to sell the house, they can show whoever they're selling it to, hey, I save 1,500 to 2,000 bucks on an annual basis on my electricity. So that's where I can show you that this house is worth more and be able to hold a stronger price point when they go to sell on the back end. And then they can do a streamline refi and whenever they want as well. And so they're not stuck hoping that rates don't drop. They're saying, hey, get in today. Let's make sure you can afford the home over the long term. And then I can still reach out to you in 6 months or a year or whatever. And then you can get them down to rates that if rates go down. But Seems like it's a weird market right now. And so kind of an example of how that'll look. So with on the left-hand side, if they don't use the green advantage, they would then earn $0. They would have normal rate, 6 3/4, cash to close. So on this example, it was a Vegas house. It was 395, and then solar was 36 grand. And so cash to close without the program was just over 24,000. And then their monthly payments were just over 2,700. And then on the monthly payments, what that was doing is we were just estimating the principal, the interest, and the estimated electric bill payment. And so we have like a better apples to apples comparison. And then the amazing part about the interest rate is these are par rates, and there's just a 50 BIP LLPA that's added onto it. And so you can figure that out on the front end or the back end. But it's perfect because a home buyer gets normal rates when they use this program. And then on the right-hand side of the little matrix, they ended up using the program. And so they earned 13,000. They had the same rates, cash to close reduced by 13, and then their monthly payment stayed about the same. So we obviously put an example that makes us look the best, right? Like, but that's where the eligibility letter that we talked about from the beginning, it's important that the property makes sense. And so it basically just can't be in the middle of a forest. And so I know it's a bunch of realtors that are listening in, and kind of how do they use this? Because typically you hear solar and you're like, oh, that's a cluster. I'm not touching that. That's going to suck. But what realtors are the best at is how do you market things to stand out? And so that's kind of the next portion that we'll get into is how do you use this program to then stand out and add more value to a home buyer? Or when you're going to sell someone's property, how do you stand out different? So they say, hey, I like you. I trust you, Vanda, to sell my house now because I think you can sell it for a stronger price point and get it sold faster. And so the two kind of biggest ones that we're seeing is first on stalled listings. And so if someone's got a property they've been trying to sell for 60, 90, 120 days, kind of wherever that's at, what we've seen is more interest when in the MLS description, it talks about some type of an incentive. And so I'm sure most of you guys have seen, hey, when there's lender credits, they'll say, oh, earned income, or they get credits from the lender, blah, 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 that kind of thing. And so what's really good as a loan officer, and where a lot of loan officers are helping their realtors, is we'll train a realtor and a loan officer to go through and look at properties, make sure they would qualify for the program, which kind of in simple terms is just double checking that it's FHA eligible and that if you looked at it from like a Google Maps, that you can see the roof. And so they would add solar to the roof. That's why they double check that side. But where a lot of success is coming is being able to market it on those listings to then stand out from the other 10, 20 houses in the neighborhood. So in the MLS description, they're putting, hey, this home qualifies for up to 13,000 in cash through preferred lender. And then Vanda, you'd obviously be the lender on those. And so what's awesome about that is then you'll have realtors that are saying, hey, well, I'm going to go and get a listing. And how do I use this to earn a new listing? And what's kind of the value prop? And so instead of the realtor just having to say, hey, like I'm a really nice person, you like me, I've got a good TikTok audience, they're like, hey, let me just give you some hard data around what I can offer. And so what we're doing, and I think I might be bouncing ahead. It might be the next slide actually. Um, there we go. That's perfect. Um, but yeah, so the buy side's simple. They're going to earn these funds. They can use it towards what they need to. It's their money. And then on the sell side, what they're doing is then realtors are going to all their selling appointments. They'll double check the address, of course, with you, Vonda, to make sure that they have it qualified, the property works and whatnot. But then they can just say, hey, the reason why you should sell it with me is because whoever buys this home is going to see around $30,000 to $35,000 in value during their first year in the home. And where those are broken down is they're going to get earned income at closing, increased equity through this program, and tax benefits. And when you can tell the home seller that of, hey, here's why to list with me, because I can hold a stronger price point and we can create more demand and urgency on this property because the other houses in here don't have that on the listing, then they're seeing a lot more property sell faster. And then it helps you also avoid going back to a seller a couple weeks post listing and saying, hey, maybe we should drop it 5 grand. Because the homeowner's like, that's straight out of my pocket. Like, I get it, you drop your commission a couple $100, but they're like, that's my 5 grand. And so the more we can avoid those, the better. So I mean, honestly, what we're having a lot of realtors do is just look through their current listings and say, hey, where can I just add this on right now to that MLS description? And how do I get more eyeballs on this property? And then how can I just go and market that? Just saying, hey, I can close more people that are wanting to come to this property because we've got more flexibility. And that's kind of where the program makes the most sense, is because the cash at close can be used for buying down the rate, paying off a debt. It's their money. And so we've got some builder loan officers and some builder realtors that are doing really good with those because you can solve problems a lot quicker. Huh?
That was going to be my question. Do they have to use those funds to get solar on their roof?
So the funds are not used for the solar. So it's kind of two parts. So there's a pre-closing where they earn the money, and then inside of the loan, it's going to be increased to cover the solar portion. Does that make sense? So they get the cash up front. And then a couple months after they move into the house, they're going to have the solar that's installed. And that's paid for by an escrow holdback account that's going to be added to their base loan. And then the solar is going to get them the tax benefits and the equity as well.
So they're really getting two benefits then.
Yeah. So they get the
Okay.
upfront benefits. And then it's not even like they have to get solar. Once you kind of understand the value of this, it's more, oh, they get solar. Like, that's crazy. But solar's been hijacked by these finance companies that put second liens and make real estate a mess. And so you're like, okay, if I could remove all that cluster, then this would be more of a value. And that's what the FHA has provided. And so here, kind of like we were saying, when they'll talk through and where does that, when I say, hey, they're going to estimate 30 to 35,000 in value during the first year in the home, this is kind of where those numbers come from. So on each property or on each buyer, we'll build out a benefits. We'll put this into a benefits calculator and just break down the numbers. And so on this one, where we said in the beginning, the DTI is the tricky part. And so they had to fit in 36 grand into the DTI with the solar. Then they saw $12,250 of earned income at closing. That was wired directly to title. We have them meet with a tax professional post-closing to help them understand the tax benefits. And these borrowers got around 7,000, so 6,800 in tax benefits. And then because the solar doesn't have liens, it actually adds value based on the amount of savings on an annual basis. So it's estimated that these guys earned around 15,000 in value from adding the solar, and then around 2,000 a year on mortgage interest and electricity savings. And so that's kind of how we'll explain it, is just when you can break everything down into one of like, here's the total value year one, and then the longer that you stay in the house, the more value that you should see, just because you're paying a lower electricity cost that's more fixed versus following what all these data centers are kind of doing to us, where we're continually paying more, just like everything on an annual basis. And so The longer they stay in, the better. We would suggest that home buyers live in the house for at least 3 to 5 years. And so, but break even is typically between years 1 and 2. And so if they have something happen, then they're like, okay, I can sell and I'm not like out of luck. But typically we're saying, hey, please don't use this unless you're living in there for at least a couple years. And so that's kind of what we've been doing. But yeah, where we get excited is just when loan officers, or I mean, when realtors go right through their current pipelines and just say, hey, I've got these buyers that are on the fence because of XYZ reason. I'm just going to call them and say that we can solve that problem through a little bit more money if they're willing to go solar and if they're willing to get some tax benefits. And so it's helping them activate pipelines that of people that are waiting for rates or waiting for prices or waiting for a debt payoff. And then on the sell side, it's helping them go through the properties they're currently listing and they're saying, hey, this property, I'm going to put this in the MLS description and I'm going to help it move it faster. Yep. Jeez.
Got another question. Will this also work on 1 to 4 units or just single family home?
Yeah, 1 to 4.
1 to 4. Okay.
Yeah, we're not doing condos. So they've got to own the land. But yeah, you can do 1 to 4. But yeah, I think I mean, that's kind of it. We've got some frequently asked questions, but the funds are earned income, which is great. So they're not stuck putting it into your LOS as a grant or a gift. And then interest rate stays the same. Monthly payment will go up slightly, but then reduce on the electricity side. No liens, nothing along those lines, no monthly payments. And then kind of like we were saying, so with realtors, when they're sending out those annual texts, if someone still has that second lien, so if they used like a DPA program or something like that, then they have the ability to refinance them and get them back down to par. That's super easy. And then, yeah, the last thing I should have covered this earlier, but I appreciate Jonathan. But when, from the appraisal standpoint, the home just has to appraise for the purchase price, not the total loan amount. And so the solar is going to be excluded from the appraised value. And the FHA allows it to go up to 120%, which we don't ever get there.
Great information. That's some totally new to me. I never heard of that program before. The one I heard of, I think got this they stopped it last year, December
Mm.
of 2025.
Yeah. But yeah, I mean, the biggest thing we've seen from doing these calls is it's like it's fun to get excited and whatnot, but it's like, how do we follow up and how do we actually take action? And so that's kind of where we have the most fun. And so especially you, Vanda, with your realtors, it's like I would reach out to all of them. I would look through the Zillow listings and just start calling them and just saying, hey, on this listing, you should add this to the MLS description. And then keep me posted when you get a new one, because I'll see if that one qualifies. And we can have a strategy to help you earn that listing easier. And then, hey, let's look through your database. Who do you have in there that's waiting for rates to drop? And then who do you have in there that's saying, hey, I can't because I got to pay off this truck first? And then just like you have a great reason to reach out to all your realtor partners constantly, just asking, hey, look through your database. Think of who's on there that doesn't have XYZ. And then you can just customize this to solve that problem. And the more they understand that, your realtors are like, oh, okay. Like you're talking about the same problem each time, but it can be used in so many different ways that they get excited. And they're like, I can market this on my Facebook and I can just say, hey, who used a DPA and wants to get out of it and wants to refi? Or who was going to use a DPA because this realtor team has a program that's an alternative to that one. And so there's so many ways of doing it, which is really fun.
So your contact is Mark at the AHA Group?
Yeah, I heard you guys say aha as well. What was that one?
That's funny.
'Cause ours is attainable housing advocates.
Ours is agents helping agents.
That's funny. Yeah, I didn't know we worked for the same org. That's awesome.
Well, mine is not an org, it's just a club that I just
Yeah.
call it. We just call it AHA of Katy Richmond. But there are
Oh,
different
okay.
AHAs around. They got one in North Houston, they got them in San Antonio.
Oh,
It's
that's too fun.
something that somebody at EXP started just to help other agents,
Yeah.
help each other out.
Yeah, yeah, yeah. That's smart.
I know, how coincidental was
That's
that?
awesome. We probably stole it from you guys.
Well, you guys are a whole organization, though. I'm gonna have to look into that. What else do you guys do?
I mean, this is it primarily. So our goal is we're trying to find a better way to help borrowers get into homes and to make sure they can afford them over the long term.
I
So
love that.
kind of addressing a couple different things. But that's where MLB crushes. Like they do the best by far with this because that's their whole mantra is the same is how do we improve everyone's lives in the transaction?
Right. I didn't know what MLB stood for until I started getting the emails. Making lives better is what it stands for, and I love that.
No, it's super fun.
Oh, great. I'm ready to
But
have
I
some
want to
fun.
make your life better, Banda.
You're gonna make my life better. You already have. Yes. I'll get in a minute. All right. Janila, you have any questions? She's a realtor here in Houston area.
Awesome.
And maybe she can't get unmuted now. And Jonathan, do you have anything you want to add, or Maria?
And nothing else from there. I thank you, Mark, for jumping on, and thank you, Vonda, for putting this together. It's always exciting for us to showcase some of these great programs we have here at MLB, and we have a awesome partner with Mark on this program
Mhm.
specifically that we've been we've had this program since was it January, February is when we officially rolled it out to everybody.
Oh yeah.
And we've already closed a bunch of them, and we've closed them extremely fast too. So
Wow.
it's great to have these products that help people out.
Yes, I already closed two loans already with Green Advantage. And
Yay.
yes, and close quickly. And um, they do not when we need anything, they provide the documentation quickly as well. And I have the experience that I call Mark because Mark is our rep, but not even only Mark because I have another contacts too. And if I cannot get an answer for Mark, then because sometimes his Mark is busy, then I call the other person and they answer me and they say, yes, I know Mark is your account executive, and but I'm here to help you because and also just to let you know too, they contact realtor and as well loan officer. And that is a great tool that we have because we are the only lender who is doing this program right now.
Okay. So do you guys have some marketing material about it? I don't know if you have it, Mark, or if you have it, Marie, that
Yes,
I
Yep.
can.
yes,
Okay.
we do have it, and just go to www wholesale, go under resource, and then marketing material, and you can order right there by yourself. You will communicate with marketing, and they will, create your flyers and under your name.
Okay.
Okay, and I think Jonathan put it on the chat right in here.
hmm
Okay. Sounds
And
good. I will
yeah,
do.
and just remember, Banda, I'm here for you and for your team. Anything, just give me a call, and and I will be happy to help.
Okay, will do.
Mhm.
Thank you guys very much and hope you have a great rest of your day and look forward to sending some more business your way.
Awesome.
Thank you,
Looking forward
Banda.
to it.
Thank you so
Thank you,
much.
guys.
Thank
Bye.
you, everyone.
All right. Bye-bye.